Grade 11s. Okay, I've picked up a question which is covering the income statement and the trade and other receivables. Okay, so we are going to be looking at this question, especially those adjustments that are a bit complicated. They are the ones that I'll be showing you exactly what is the easy way, which one is the easy way to go about them. Okay, fine, let's just start our question and see if we can be able to finish within the shortest period of time possible. With bus shoes, you are provided with a pre-adjustment trial balance of bus shoes on the 28th of February 2022. Bus shoes are a partnership with partners A Boots and T Techies. The business sells shoes and also repairs shoes for which a fee is charged. Okay, complete the following on the 28th of February 2022, the income statement and the trade and other receivables. Okay, fine, we are going to start with our trade and other receivables. This is the pre-adjustment trial balance, and then the adjustments are given. So this is all the information that we have that we are supposed to use to do our income statement and our trade and other receivables. Yes, by now I believe everybody in grade 11 knows the format that is used to prepare an income statement. Of course, we are going to start by recording our sales. Okay, so from the information that are given, we know that sales, we find them in the pre-adjustment trial balance under the nominal account section. So we are given the amount for sales is 916,000. Okay, fine. I would actually also urge you to say whenever you are recording all these amounts in the income statement, you always open a bracket to do a calculation before you put the final answer. That is going to help you to get the part marks. Okay, fine. Let's look at the sales I've got in the answer book template here. So I'll be recording as we go. Okay, fine. Like what I said, the first thing is supposed to be our sales. Okay, we open a bracket. We've got 916,000 given in the pre-adjustment trial balance. Do we have any debtors allowances? Let's check from the information that we are given if there are any debtors allowance. There are also usually debtors allowance under the nominal account section. We have got 8,000 here. Okay, so we always subtract our debtors allowances minus 8,000. Okay, after recording these debtors allowances, now we can check on the adjustments or the additional information if there's still any other debtors allowance that are available. Okay, fine, let's check. I think we've got adjustment number 6. They say a debtor returned goods with a cost price of 450. The business used a markup of 20% on cost price on the goods. No entry was made, so this entry was not recorded. These goods were returned by a debtor. These are also part of what? Debtors allowances, and they were not recorded. So what we are supposed to do is to record them. A debtor returned goods with a cost price. We are given the cost price here. So we need to find the selling price, okay, for our debtors allowances so that we can adjust for our sales. By the 450, we will adjust it the way it is on the cost of sales. Okay, so we are going to say, okay, the 20% markup. So we are going to increase 450 with the markup of 20%. So, okay, fine. This is my calculation. We actually say the cost price, you say times the selling price percentage over the cost price percentage. Okay, so when you substitute now, we are going to have 450, which is the cost price given, multiplied by the selling price percentage. Selling price percentage usually are cost price plus markup, okay, which means the selling price percentage is 120%, okay, over 100%, which is the cost price percentage. So when you multiply 450 times 120 over 100, you are going to get 540, which are the debtors allowances which were never recorded. So we are also just supposed to indicate that we also had other debtors allowance. We are also going to say minus 540 for the new debtors allowances. Okay, that is all for sales. And also for cost of sales, because of those debtors allowances that were not recorded, we are going to say the cost of sales that are given here, okay, in the pre-adjustment trial balance, they are 510,000. We are going to say 510,000, okay, minus 450. Okay, so okay, let's go to our calculators and put the final total for sales and the final amount for the cost of sales. Okay, on my calculator, the sales are now 907,460, 907,460, and then the cost of sales now on my calculator, They are 509, 550. 509, 550. So we can safely now calculate our gross profit. Gross profit, we know that it is our sales, of course, minus the cost of sales. Let's put the cost of sales in brackets, okay? And then our final answer for the gross profit now is 397,910. 397,910. This is our gross profit. So this is the first part of our income statement to calculate the gross profit. Let's now move on to the other operating income. We have got discount received, which is already given. After the discount received, we also have got other income there, fee income. Let's record our fee income. Fee income. The fee income that is given there, let's open a bracket for it. Let's go back to the pre-adjustment trial balance. The fee income here, we've got 16,000. There is 16,000 for the fee income. Do we have an adjustment for fee income? Let's go to our adjustments and check the adjustment for fee income. We have got adjustment number 5. Fee income includes an amount of 250 that has been received in advance. What do we do with an amount that is received in advance? We subtract. So we are going to say minus 250. Okay, 16,000 minus 250. We are going to remain with 15,750. 15,750. Okay, we also have got rent income. Rent income. The rent income that is given, okay, it always is an adjustment. Let's open our bracket. The amount that is given in the pre-adjustment trial balance is 12,360. 12,360. Okay, let's now look at the adjustment for the rent income. What does it say? It's adjustment number, I think it's adjustment number 3 or number 3 if I'm not mistaken. Okay, or number, let's see the rent income. Where is our rent income? Okay, number 7. Adjustment number 7. The rent for January and February 2022 has not yet been received from the tenant. Note that rent was increased by 10% per month as from the 30th of September. Okay, so we know that our financial year, okay, this is our rent income. Okay, we know that our financial year runs from 1 March, okay, 2021 to 28 February 2022. Okay, and then they are saying that, okay, 10% per month as from 30 September, is it? So 30 September is somewhere here. 30 September, they said there was an increase of 10%. So we're going to say plus 10% here, okay? 1 March to 28 February. 30 September, that's when the rent is being increased by how many? By what percent? 10%. And then we are also told that the rent for January and February was not received. So we have got accrued income. So January is somewhere here. So from January up to February, these 2 months. So we have got 2 months, okay, accrued. Okay, there's accrued income. Okay, there's accrued income here. Okay, so it means, okay, let's just check from 1 March to 30 September. How many months are there? We have got 7 months. Okay, from 1 October up to December, because remember January the money was not paid. So here we've got 3 months. Okay, so if we say 7 plus 3 plus 2 which were not paid, we can have our 12 months. Okay, so now let's check first with how much was the rent from 1 March to 30 September. The rent here from 1 March to 30 September was 100%. Okay, but from after 30 September up to the end of the financial year, the amount had increased by 10%. So from 100%, we add 10%, it becomes 110%. So, okay, fine, here it means we are going to say times 100%. And then this side, we are going to say times 110%. Okay, I hope we are still together. Remember, the rent was increased. Here it was 100%. If we add 10%, it becomes 110%. Now, the reason why we are doing this calculation, we want to find out how much was the rent here, how much is the accrued income. Okay, so let's first of all do this calculation. So if we say 7 multiplied by 100, we are going to get 700. And if we say 3 months times 110, we are going to get 330. Okay, if we add, we are going to get 1030. But we are interested in the amount for 3 months, which gives us 330. So we take our 330, okay, as a fraction of the total. 1030 times the rent amount that was received in the pre-adjustment trial balance, which is 12,360. 12,360. Okay, it will give you something like, let me check on my calculator. When you calculate, you are going to get something like 3,960. 3,960. This money is for 3 months. So you divide this amount by the 3 months. Okay, by the 3 months. Okay, you are going to get something like, let's see again on my calculator, you get 1,320. 1,320 per month after the increase. Okay, so how many months are accrued? There are 2 months. So now we take the 1,320, we multiply by 2. Okay, it will give us something like is 2,640. Okay, then therefore the accrued income is equal to 2,640. The accrued amount is 2,640. I hope you have understood this calculation. You can just rewind it again to check exactly how I actually did this calculation. I wish that you actually do understand how I have done this calculation, and you can never have a problem again when you confront such an adjustment. So when we come back now to our answer book, okay, fine, we're going to say, what do we do in the accrued amount? We add what is accrued, is it? So we're going to say plus 2,640, okay? So 12,360 plus 2,640, it is going to give us something like 15,000. 15,000, it is our rent income, okay? Do we still have any other income? We have got bad debts recovered. They were given as 190. Okay. Our bad debts recovered. Okay. It's 190. And then we also have got the provision for bad debts. Provision for bad debts. Okay. Adjustment. Okay. But anyway, I don't have the space to write adjustment. We need to do this calculation and find out what happened with the provision for bad debts adjustment. Okay, the money that we are supposed to look at first when we are looking at the provision for bad debts adjustment, of course, we need to identify the debtors control. We have got the debtors control given there. Okay, I'll indicate here. I'll just indicate debtors control. We have got 43,000. Okay, do we have anything on the adjustment that is affecting our debtors control? Okay, that is the other thing that we are supposed to check before we go to this adjustment that we are given here, which is saying, okay, the adjustment which is saying number 13, the provision for bad debts must be adjusted to 2% of the remaining debtors. The remaining debtors. Okay, if we look at the adjustment that we are given, we've got adjustment number 1. A debtor D. Smith is to be charged 40 rand interest on his overdue account. Okay, what effect does this transaction have on the debtors control? It is going to increase, okay, the amount of the debtors control. So we are going to say plus 40. Okay, 40 is for the interest that was charged. Okay, do we have any other adjustment that is going to affect our debtors? Okay, let's look at the adjustment number 3. G. Smith is a debtor who owes 300. This must be written off as bad debts as he has left the country. Yes, he has run away with the money, so we are no longer expecting to receive this 300 from G. Smith. So what do we do with this amount? This amount for bad debts is going to reduce our debtors. So we are going to say minus 300. Okay, this one is bad debts. Okay, do we still have anything else? Let's just check to see if we still have got something else that is going to affect. Okay, if you remember when we recorded the sales, we had this amount for debtors allowances. They were not recorded, but now that we have recorded them, it means these debtors allowances are also going to affect our debtors control by reducing them by 540. So these are debtors allowances. Okay, so when we calculate 43,000 plus 40 minus 300 minus 540, we are going to remain with something like 42,200. We remain 42,200. These are the remaining debtors. Now we can safely multiply by the 2%, which is going to give us 844. So our new provision for bad debts is now 844. Okay, so what do we do in the income statement? We need the difference between the old provision for bad debts and the new provision for bad debts. Okay, let's go back to our question. And then if we check here, the provision of bad debts are given as 1,000. The new one is 844. We can safely also say that our provision for bad debts has decreased. And the decrease in provision for bad debts is income. That's why I recorded it here. If it was going to be an increase, I was going to record it under the what? The operating expenses. So we are going to say, okay, 1,000 minus 844. We are going to remain with 156. Okay, so the difference between the old and the new is our income, which our other income, which is 156. So we can add all the other operating income, and then we get a total of 31,576. 31,576. That is the total for the other operating income. Then the gross operating income, we are saying gross profit plus other operating income. Gross profit plus other operating income, it is going to give us something like 429,486. 429,486. Okay, this is the second part of the income statement. The first part, we calculate the gross profit. The second part, we've calculated our gross operating income. Okay, for now, I'm going to end here, and then I'll continue again on part B. Now I'll be looking at the operating expenses. Thank you.